Hey everybody, good afternoon. Hope everybody's day is off to a great start. My name is Laura Bolio, and I'm the VP of Marketing here at Holistiplan. I'm joined by the incredible Debbie Taylor and Greg. So today we are covering something that is super, super important, especially for this time of year. We are talking about end of the year tax planning, which we are right in that holiday swing. It's only a couple weeks left really in the year. So that's the big thing. That's the big news. So today we have Queen Debbie, as we like to call her here at Holistiplan. She is the founder and lead tax planner at Taylor Financial Group. She's also a well sought after speaker. She was at our conference that we just did at Nitrogen, and she had only standing room only in all of her presentations. And so with that, Debbie, Greg, I'll hand it off to you guys.
Yeah, that's great. And Laura, do you guys really call me Queen Debbie down there, or that's just something you made up?
We do. Yeah, we have a crown that gets tagged to your name whenever you're mentioned. So like in our planning calendar, we have Debbie with a crown in the webinar, Queen Debbie.
Okay, that's hysterical. And welcome everybody. And so we put these webinars together for future Holistiplan subscribers is how we think of all of you. So you're not subscribers yet, but you will be subscribers very shortly. So that's the idea behind these webinars, and we're doing them every month. We also have the masterclass webinars that we're doing generally on that third Thursday of the month, and that is for subscribers only. And so one other reason to subscribe to Holistiplan is being able to tap into the master classes that we do, which have been wildly successful. And so with that, then today, let's hop in. We're going to talk about 4 proven ways to close business, increase wallet share with Holistiplan, and then also dashboard deep dive and last minute tax planning. So lots of content to cover here. I have Greg of my team who is going to work with us in doing some of the demos here. And basically then the first thing is the dashboard as the central tax planning hub. And so here's what we're talking about is we have a lot of this niche software. And let's just go back for a second. We have a lot of this niche software, and it might not be thinking about the enterprise, how to organize your book around it. And so what we want to do then today is help you not just sort of review a tax return, but then see, okay, how do I organize this information so that I can look across my book? And that's really powerful as we build tax planning into the fabric of our practice. And so maybe in the old days when you only did this episodically or in reaction to a client saying, hey, can you look at my tax return? Maybe you didn't think about, oh, I need a dashboard. Oh, I need to organize all this data, right? But as you join Holistiplan, as you weave this into your service calendar and into your practice, then you're going to see where it's really helpful to say, hey, which of my clients are making over $400,000 a year? Which of my clients are in the 22% tax bracket? Which of my clients are filing single? Because that will drive certain service offerings that you're going to give them. Also think about it with a changing tax code. So we know that, we have a new president. We have a Republican sweep. So a lot of the fears about TCJA going away, some of those fears have subsided, but we still know there are going to be tax law changes. The TCJA expires at the end of 2025, basically a year from now. And we know there are going to be changes. Now, I've read that some of those changes could be coming a little bit quicker, anywhere from 3 to 6 months into the new year. Nobody really knows, particularly now, it's a little bit early on. But at the end of the day, we're going to have changes. And when those changes come out, your clients are going to have questions, you're going to have questions. And so it's like, hey, this change that we didn't really anticipate, or it's some compromise between the R's and the D's. How does this affect my clients? Well, you can then go to your Holistiplan dashboard and filter out, figure out then who is being affected, and then you can do outreach around that. And so that then takes us back to how important it is to collect tax returns from everybody and run them through Holistiplan. And so that's where then we don't want to save the penny and spare the pound and be like, oh, I should only do this for clients that make over $400,000 a year, or I should only do this for my business owners, or only do this if somebody's asking. It's like, no, you should be doing this for all of your clients, because if no other reason, and there are a lot of reasons, but if no other reason, there are going to be many tax law changes over the next year, and you want to be able then to digest, your client who's being affected and figure out then what analysis you're going to do, what outreach you're going to do. There's also a bunch of other reasons that you want to be collecting tax returns from everybody and running them through Holistiplan. And one of the things we've talked about in other webinars that we're not going to go into too much detail here, right, but just very high level, is sometimes the assistance that you can provide from a tax planning standpoint is not necessarily obvious. And so you'd be like, well, the only people that need our help are clients that are in the highest tax bracket or the two highest tax brackets, right? 35 and 37%. But that's not true. We know that clients could have a significant taxable event. They could have carry forward losses. They could be in the lowest tax bracket, but with a very large traditional IRA and really benefit from distribution planning and drawing down that traditional IRA in those valley years is what we call it, right? When their income's low. So there's a lot of things going on behind the scenes with these tax returns that make sense for you to be collecting them from everybody, running it through Holistiplan, getting that tax report, and then figure out who you're going to be digging deeper for, where you're going to be digging deeper, and what you're going to do. But the first step, right, is collecting those tax returns. The other two things we're going to talk about today, right, is some proven ways to close business and leveraging Holistiplan, and then some last minute tax planning ideas. The reason I say last minute tax planning ideas is because we have been covering this in our masterclass series, literally for like the last almost 2 months, right, month and a half. At Holistiplan, I like to get ahead of these things. We like runway. We don't want to spring these things on you, like the first week of December, tax planning, right? And so we're talking about these things in advance so that you can staff up for them, you can think through them, you can listen to some of the suggestions we have. But having said that, for a lot of people, they start thinking about tax planning now, right? We're thinking about tax planning 12 months a year, but they're thinking about it now. And so we do then cover high level some of the critical tax planning areas that we do not want you to forget. And so with that, then let's hop in household dashboard as a central tax planning hub. And so you are not subscribers yet, but this next slide shows you what is the household dashboard, right? Well, this next slide actually is describing it. The slide after that is going to show you what the dashboard is, but we'll stay on this slide. And so the dashboard, again, is a way to organize the data. And what you're going to see Holistiplan do more and more is help you manage your enterprise and organize this data. And so the dashboard can help you. Like if we go to the next slide, you'll see that the dashboard can help you where it will show you AGI. It will show you marginal bracket. It'll show you carry forward losses. It'll show you which years you got the tax returns for, different age milestones. And then you can even create tags and sort of customize it. Also the states that they are in. So there's a lot that can be done here that Holistiplan provides you, and then you can customize on top of that. And so this is high level, a way to organize the book. Obviously, these are fictitious names. And with that then, Greg, why don't we hop into the demo, or you can take it away from this part.
Perfect. Thank you, Debbie. And hello, everyone. Happy to be joining, to do some of these demos because really just want to, like Debbie said, highlight just some of the power of this dashboard capability. So it really just goes so far beyond, just putting in a tax return, getting out numbers. It goes so much more in depth than that. Maybe in the past you were running tax analysis for clients, but the analysis was hidden in a file somewhere. You couldn't access it easily. Even if you could, you couldn't get much from it. So the difference between, that sort of old way of doing tax planning and this new way, which Holistiplan provides, is just night and day. So from
I'm going to
go ahead.
If you could just speak up a little bit, so move the mic a little bit closer, like super,
No problem.
like you're swallowing.
Hopefully that's better for everyone. I
want you speaking up even more and having the mic even closer.
Okay. Hopefully that's coming through okay. This mic is supposed to be very good. So that's the hope. Debbie, hopefully you can hear me okay. And hopefully everyone on the call can hear me all right. So you should all see my Holistiplan homepage here. I've just logged in. And what I'm going to do is just click into my households. So just like Debbie was describing, this gives me an overview of all of my clients. and a lot of pertinent detail for their specific situation. So, for instance, a state, it's going to list the state that's on the most recent tax return. So, this could be extremely helpful if we know for a fact that, a certain state is contemplating, for instance, several years ago, Tennessee phased out their income tax. So that could be a great way to isolate your Tennessee clients to do planning for those clients. We have AGI here, so we can see that easily. Marginal bracket, this could be a great way to just sort of isolate which clients, maybe it makes sense to do Roth conversions in a particular bracket. Let's see all the clients that are in a particular tax bracket. Carry forward losses, this is one that I definitely want to highlight because, coming to the end of the year, this could be a great way to start a campaign for your clients to just say, hey, who's got carry forward losses? What can we take advantage of here? One thing I do want to point out, I'm actually sorting the clients by carry forward losses right now. So any of these, any of these fields can be used to sort these clients all around. So a great example would be carry forward losses. So we can do, least to most or most to least in this situation. So which clients need the most work could potentially gain the most benefit from capital gain harvesting because they have those carry forward losses. So great way to just see this from a high level, all the clients across the board. Like Debbie said, we have all the tax returns through the various years. If we're missing one, let's say, oh, we need Austin and Leela accumulators 2023 tax return. We know that it's filed because if they haven't filed it by this point, they got big problems. But so let's make sure that we get that tax return. Let's run it through here. Age milestones is another field that you can see here, and these are automatically generated by Holistiplan based on the information that's entered about the client and based on the tax return. So just want to highlight a handful of them. Age 62, age 59 and a half. Why is this being generated? So if I hover over this age milestone, Peter Professor is eligible for penalty-free retirement withdrawals. So, maybe this is on your radar, maybe it isn't, but just having it in this easy to view area. And again, all of these milestones can be sorted. So if I only want to see maybe people who are RMD age, I can click the RMD age milestone tag and sort my clients only by that milestone. So I'm just going to come back out. I'll click all milestones again. So QCD eligible, that could be another great one. Ongoing discussion as part of tax planning. These are not, this is not reaching out to the clients for you. Of course, we still have to put in a lot of work to get these messages, to get these recommendations off to the clients. But this is a great way of organizing. One last column here that I want to just point out. This is really like, where the magic sauce happens. And this is where the report can really be used to customize your practice, your book of clients, how you manage your book of clients. So tags are completely customizable. So if I click into my funnel here, I can manage my firm's tag list. So this is our sample environment. So we only have a handful of clients. We have a handful of tags, but let's click in here. I can create any tag that I want. So let's say I want to create a tag for completed Roth conversion in 2023 because we're going through and we want to know all the clients who we did Roth conversions for in 2023 because that gives us a good hint. Hey, we're probably going to do it again in 2024. So I add that. I can customize things like the color, to your heart's desire. So let's do that and let's say yes. Now that I've created my tag, as I click into clients, let's say I go into Karen and Eli Champagne. And once that loads up, here's where I apply tags. So let's say I know they completed a Roth conversion in 2023. And we just completed a Roth conversion analysis for them. We've sent them a recommendation. Let's apply this Q4 Roth conversion tag here as well, because we want to put them on the list of clients who we know we've sent a recommendation out. Maybe we're still waiting for a reply from the client. And let's just come back out here to the household just so we can see what that new tag looks like. So we know now our tags have populated here. Not only can we add custom tags, we can sort by tags too. So one way that we use this is just to track, okay, which clients have we sent recommendations to? I'll check my box here, and now suddenly I have a list of all the clients who perhaps were waiting for responses from, we've sent recommendations to, and we need to get the ball rolling. We're getting to the end of November. There's not a lot of time to complete these conversions. So, let's send a campaign out to all these clients, reminding them to get back to us, let us know what they think about our recommendation. Once that is complete, let's say Karen and Eli decide to go forward with their Roth conversion. We'll come back here. Let's delete this tag because they're no longer waiting. And let's say 2020, we'll apply the tag 2024 Roth conversion completed. So we've replaced the, in process tag with our completed tag. And again, we come back out to the household and you see that tag applied here. So, I'm using this on one client, but when you have a book of 100, 150 clients, this is so helpful to manage, to track the process, to track the progress, of a particular campaign, like Roth conversions, for instance. Another thing that I love about the dashboard is that you can always download this. So, if for whatever reason you need to get a little more granular, your Excel skills are legendary, and if you only had this information in Excel form, you can download it here. It'll populate all of these fields into an Excel spreadsheet. Going even a little bit further than that, tools and resources. There's also custom reports that you can build within Holistiplan. So this is it's sort of an iteration of the dashboard, but let's say create a custom dashboard. So, if you want to see all of your clients that have Schedule C income, I've created this as an example, but let's edit this report just to see what this process looks like. So you name the report. You can select the tax year that you would like to base it on. So I want to look at the prior year. And in this instance, I've said, let's just show me all of the clients who have Schedule C income. So you generate and save that report. And now I can view this report and it'll show me every client that has Schedule C income with a true or false. This is where maybe your Excel skills might come in a little handy, but this can be sorted by the answer. So I can isolate those two clients that maybe have Schedule C income, and perhaps we want to do a little bit of tax planning for them specific to their business income. So this is just another report that can be exported, and it's really just to, again, highlight the flexibility and just the richness of the data that's being pulled forward into a viewable report, so that you can quickly ascertain which clients need which types of planning. And so with that, anything to add on the dashboard, Debbie, or anything maybe you want to show the folks on the call here?
No, I think this has been great. You're doing good.
Excellent, excellent. Well, thanks very much. I appreciate that. So I am going to jump back over to the deck, and we'll continue on.
So back in the deck, for people who are just looking at the deck but not able to sit through on some of this, we have a number of slides then on the deck. If Greg, you go back a few slides, right?
Sure.
And so we have, like, if you go to slide 6, we have the household dashboard can be sorted by any field, right? So I know we already walked through some of this, but it's nice to just see the slide, like here it is, right? And then the next slide, we show Holistiplan applying the age milestones. And so here's some of the choices we have for the age milestones. Some of them you might not want to use, right? So if you're like, hey, age 62, I don't want to remind clients that they can take their Social Security early. So we don't here, right? Because I think, I've seen data that 42% of folks take their Social Security early. And my belief, it's probably the wrong choice for 90% of them, maybe even more than that, right? And so some of these you might say, hey, we're not going to reach out on that. But then like Medicare next year, like, that's interesting. And so there's a lot of ways to skin this and figure out how it fits into your practice. And then the next slide is creating the custom tags to add even more customization, right? And so you just see us walking through some of this here: $1 Million IRA, annual QCD, Q4 conversion tag, right? And so again, just some ideas. You're only limited by your imagination. And then the next slide, which is the end of this section, is again creating the custom tags. And then this shows you how it looks actually on the dashboard. So again, the idea here is Holistiplan allowed us to dig deep and get into the weeds on an individual client's tax return. And now, in many respects, it's helping us to take that step back and trying to manage all of these clients throughout our book, which is really powerful as you build out your tax planning practice, right? Once you sign up with Holistiplan. All right, the next section is 4 proven ways to close business and increase wallet share with Holistiplan. And so let's go. This next slide shows you, I call this the trifecta, right? And the trifecta is, 3 really critical planning and services. It's investment management, it's core financial planning, right? And then it is tax planning. And so I call that it's like the trifecta. And what you see then is these top growing firms all claim to be doing this. 91%, 96%, 97%, right? Like these are considered core services: investment management, retirement planning, and tax planning. What you also see is that all other firms, right, the firms not growing as quickly, and they are only about half of them, less than half, are providing, these services. And so what we want to focus then on is, if we are the firm that wants organic growth, and most of us want that, is looking at this chart overall and saying, hey, these are services that my peers say that they are providing. These are the types of services that clients are wanting, and we have other data on that from CEG. Which of these services am I providing? And you can see that tax planning probably is the most critical of all of them. And why would tax planning be the most critical of all of them? So the next slide shows you is, first of all, the data tells us that more and more of these clients are asking for this. But how I view this is, I think tax planning is like the next frontier for our practices. So 10 years ago, we started doing planning, right? Accumulation planning, e-money, Money Guide Pro. And we're like, yeah, like we're doing planning. This will make our clients sticky. This will help us get to know them. And it certainly helped with a number of clients. But as technology advances, as people become more selective, more thoughtful, right, is now that next frontier is tax planning. And here's why I think tax planning separates itself from all these other additional forms of planning. And it's not to say that those are not important, like healthcare planning. Healthcare planning can be incredibly critical, particularly if you've got like a chronic illness or long-term care, right? Healthcare planning is helping get somebody through their life, right? I mean, that is super important. And so there are times where these other types of planning are super important. But day in, day out, overall, why does tax planning win every single time? Is because it's quantifiable. Is when you do tax planning, you can demonstrate to a client that I am saving you hundreds of thousands of dollars. I am saving you millions of dollars. I am helping you with the number one expense that you're going to have in retirement. And your number one expense in retirement is likely to be lifetime taxes. Okay? Nobody thinks about it like that, but it is likely to be your client's biggest expense is your taxes in retirement. And so all these services, yes, they are valuable, and you should consider offering all of them, particularly, again, on an episodic basis. If somebody needs healthcare planning or benefits work, like all these things are super important. But what has the most impact day in, day out for your clients, for their family, for the next generation, for their partner is the tax planning. And that's why more and more, I think you are seeing clients when we're saying, hey, what services do you want from us? Tax planning ends up number one on the chart, outside of investment management and financial planning, which I think are being seen more and more as table stakes. Interestingly enough, in connection with this, Vanguard did a tax alpha study, and I've quoted it from time to time. But Vanguard, every year for the last 15 years, does a very rigorous tax alpha study. And their tax alpha study tells you that tax planning can add at or above 3% a year in returns to a client's portfolio. And I would tell you that that is a conservative estimate. And Vanguard even acknowledges that it's probably conservative. Vanguard identified 7 different modules. And interestingly enough, they did not get into distribution planning as one of those modules, because Vanguard doesn't do any of that. And so even within these 7 what I would consider to be core modules, they are saying that tax planning can add 3% or more a year in net returns. And so that is your fee times 3. And that's just the start of how tax planning can really make a difference for these clients and prospects. If you want to look at that Vanguard study, it's on their website. It's prominently displayed. It has its own tab. And like I said, they've been running it every year for the last 15 years. All right, so let's go to the next slide. What is tax planning? And so it's interesting because people, let me just, people will wonder what tax planning is. And so if you look to the next slide, you will see the key tax planning activities. This is just a list that we've come up with. There are others, but this is 10 activities. And so what I would challenge you is, which of these activities are you offering to clients? So tax planning is not just some talismanic phrase. It's not like, oh yeah, I do tax planning. We do some tax loss trading at the end of the year. And if we're lucky, we find 1 or 2 things to sell at a loss, right? That's not tax planning. This is tax planning, is building out a service calendar, providing these services year round, not doing it as a reaction, but doing it proactively, having a service calendar in place, right? That is tax planning. And so again, I challenge you, how many of these services are you providing? And the next slide shows you a handout that we have talking about it, because sometimes people say to me, hey, I talked to this other firm and they say they do tax planning. And I'm like, oh, really? Do they do retirement planning withdrawal strategies? Do they do tax-focused investment strategies? Do they do family risk management, right? Like, do they do these things? And here is how you know whether another firm is just throwing out the fact that they do tax planning, but they're really not doing it, is you ask, do they collect the tax return every single year? That's the key. It's the sine qua non. Do they collect a tax return? And if they do not collect a tax return every year, they're not doing tax planning. You can't do tax planning without a tax return, right? You can't drive to California if you don't have a car, right? You need a car to drive. You need a tax return to do tax planning. And I guarantee, if they're like, oh, well, I talked to this other firm and they say they do tax planning, or like my current guy does tax planning, be like, oh, does your current guy collect the tax return every single year? And when they say no, then you're like, well, then they're not doing tax planning, right? They're not doing tax planning. Let's go to the next slide here. And we're going to talk about tax return review to identify high cash positions. And so we just talked a little bit about tax planning and how to position it with prospects. It will help you close. And it will help you close larger clients, and it will help you gain wallet share from those folks that you are closing. And we talk about this a lot in the master classes. All right, number 2 pro tip here is high cash positions. Now, this is something that even a year ago, we did not have to worry about, because of TINA, there is no alternative, right? And so even a year ago, people were not stockpiling cash. They were coming to you, they're bringing their money, and they're saying, I have to give it to you because I'm earning, 50 basis points in the bank or 25 basis points in the bank. TINA. And they were doing it and they were upset and they were frustrated, they were stressed out, but they were giving it to you. Now, that extra cash is sitting in the money markets, in the CDs, right? In all these cash type accounts. Well, we know interest rates are going down, right? They're continuing to go down. They might go down a little bit more slowly than we thought, based on what Powell was saying last week, but they still have gone down and they still will continue to go down. And so now these cash opportunities are losing their luster. And so this is the beautiful thing about these tax returns, is that here's what it looks like the actual tax return schedule B. But if you go to the next slide, this is the Holistiplan report. And you can look at this and you see Allied Bank for $3,000. And that can tell you that this client might have $100,000 sitting in Allied Bank, right? Assuming a 3% interest rate. Then they have $1,250 at Schwab. That could be about $50,000 sitting in a cash account at Schwab. And so in the past, we didn't have to look at the Schedule B so closely. We didn't have to look at income sources because we didn't have to worry about this. Clients were not sitting on all this cash. But we know now that clients are sitting on cash. And so Holistiplan, if you get Holistiplan for no other reason than to identify the Schedule B and see where your clients are holding their outside investments and see what type of cash they are holding. If for no other reason you got Holistiplan for that reason, Holistiplan would pay for itself 100 times over. So anyway, that is one thing to be thinking about that even a year ago, you wouldn't have had to think about that. So on the next slide here, is going a step further than looking at the bottom on the dividends. Same concept here. Now, we've always looked at the dividends because I want to know if I've got 100% wallet share. And so we've always looked closely at the dividend. And what you see here is the Vanguard, there could be $500,000 in that Vanguard account, right, with a $10,000 dividend. And yes, dividends could be slightly higher or slightly lower. I totally get that. I'm estimating, but you get the picture here. This is a sizable amount of money that is a Vanguard. Why? Maybe you offer a second opinion, right? Let's review it. Let's have that conversation with our clients. Let's send them a letter on it. Now, I custody at Schwab, so the stuff's at Schwab, obviously I'm perfectly happy with. So what we did then over the summer is we started a wallet share project, and we reached out to clients and said, hey, we see that you have $10,000 in interest income with Ally Bank. We see you have $4,000 in interest income from Bank of America. Interest rates are starting to go down, and any CD rates that you locked in the past are likely not to get renewed at that higher rate. We should get together and create a strategy in connection with your cash for going forward. And so we reached out over the summer. We called it our wallet share project, and we brought in, millions of dollars in connection with that and raised awareness. So maybe some of that money doesn't come in today because it's stuck in a CD, but now you've planted the seed, and we'll get a phone call 2 months from now saying, hey, that 6-month CD expired. You were right. The bank is trying to decrease the amount. I think it's ready to bring that money to you. Remember, the other thing is that this election, the data shows that people sit on the sidelines during elections, all right? Like, we have data around that. And so, again, one of the reasons you want to be looking at these tax returns even next year is to see whether people stockpiled cash or more conservative types of investments elsewhere. And now that the election is behind us, perhaps we should be getting that into the market. Okay, so the fourth pro tip is the value of tax planning through all stages and changes in life. And so it's amazing because I think we had a question on this at one of the previous webinars. And it was like, okay, you're talking a lot about retirees. How does tax planning help at all these other stages? And the truth is, it does, right? Is every single stage, if you bring your tax planning best, you are able to make a huge difference in the client's lives. And so even with young accumulators, and you're like, well, Debbie, like, what can you do for the young accumulator, right? And the young accumulator, and Greg's going to walk through some of these, the young accumulator could be like, hey, you need to be maxing out your traditional 401k plan. Here's how much you'd save in taxes, right? The young accumulator could be, hey, we want you maxing out on your Roth 401k. And they're like, oh, but I always heard I should do traditional 401k. And you're like, hey, you're in a very low tax bracket, so you're not even getting a tax deduction that's worthwhile. And a Roth 401k is going to be so much more beneficial for you over your 50 or 60-year working life. It's like, wow, I never thought about that. I just always been told to go into my traditional 401k, and I get a tax break for that. Well, if you're in one of the lowest tax brackets and you've got this 50 or 60-year time horizon, why wouldn't you be putting it into a Roth 401k? Well, those are some of the numbers that you can run through here, even again, for that young accumulator. And then for the experienced accumulators, you can run the analysis of Roth 401k versus traditional 401k. You could work on them with asset location, which was one of the modules that Vanguard identified to get to that 3%, is asset location, which, by the way, I believe is one of the unsung heroes of tax planning. And so really at every stage here, you can be making a difference for your clients and build out that service calendar. And then with that, I think, Greg, you're up, right, to do some of this demonstration.
That's correct. So hopefully everyone can hear me all right. And like Debbie said before, we do have screenshots of what I'm going to show you in the software itself. in the presentation here for future reference. So you'll be able to to reference that later down the line, or if anyone wasn't able to join the call, they'll be able to see exactly the types of scenarios that we're going to discuss right now, to really just dig deep into what it is that can be done from a tax planning perspective, throughout all of these stages and changes of life. So with that, I'm going to just switch over to my demo screen here. And what we've prepared today is just a little bit of a scenario analysis, throughout life. So we have Jennifer Miller here. She recently got a promotion at work. She's earning quite a bit more than she was 12 months ago. So, she was earning about 100,000. Now she's, bumped up to $200,000 in wages every year. So she gave us her 2023 tax return. So let's click into Jennifer here. And I'm going to go right into her scenario analysis. So using the 2023 tax return, we were able to build a base case on the for 2024. So many of these items were brought over from her 2023 tax return, but of course we're going to make edits for current year wages because obviously she's earning more now. But a lot of these items, do pull over, which is so convenient, which is very helpful. You can do it very quickly to give this base case scenario. So we can see, really what her situation looks like. Obviously, she's going to take the standard deduction. We get a sense of what her taxable income is, what her marginal bracket looks like, and then all of the tax calculations on that. So we have the state identified here. She lives in New Jersey. So this is just, a great starting point to help her understand a little bit about what her 2024 tax situation is going to look like. And then from there, we can start to, build recommendations, like Debbie said. So, high earner, let's say up to this point, I'm just going to scroll back up to the top here. Let's dig into her wages. So she's earning about $200,000 a year. And when she was earning about 100, years ago when she started working, her a friend of hers at work just told her, hey, why don't you just contribute the match contribution to your 401k? So company has a 401k match, it's 4%. So that's what she set her contribution at. She's at $8,000 in contributions to her 401k. So that's a great place to start for scenario analysis. So what I'm going to do here, I actually banked a couple of scenarios. So I'm going to pull out a scenario that we created just to give Jennifer a sense of what maximizing her tax deferred 401k contribution could look like. So rather than the $8,000 match, now we're maximizing at $23,000. In addition to that, she chose the high deductible health plan, but she wasn't really contributing to the HSA because she didn't understand it. She wasn't really, sure what to do with it. She didn't go to the doctor all that often. She didn't have a lot of health expenses. So, on top of that, let's max out your HSA as well. And, just by plugging these two items in, what we're able to do is just give her a side-by-side analysis of what her tax situation is going to do, what the tax savings would be. So I'm just going to scroll down to the bottom here, to the summary section here, and it just gives you a great sense. So she's saving about $5,000 on the federal side, a little over $1,000 on the state side. So a $6,000 savings, is a great end result for her. And again, just gives a good sense. This is an early accumulator, a young individual. We're not necessarily recommending Roth conversions or some of these other, more, some of the other strategies that we discuss in our sessions. But this is a great way to add value to a client who's maybe just coming on, is an early accumulator. So with that, Jennifer also let us know, I think I'm going to get married this year. And congratulations
sure?
to her. Yeah, I think. Yeah, well, the dates on the calendar, they're getting married. They only have a month and a half to go, but they're going to the courthouse because they're madly in love.
And
So
are they getting a prenup?
I hope so.
Okay.
She certainly should. We would absolutely recommend that. Um, And so, her boyfriend James, he does work. He's a healthcare provider. He's a nurse. So let's see what getting married looks like. So suddenly, we're switching a couple of things here. So filing status is going to change. Suddenly, they're married filing jointly. So here's Jennifer. Here's James. I'm just going to hide this field here. here's our income. So James is also, he's earning $75,000 a year. They can pretty much get by. So we're gonna buy on Jennifer's income. So we're gonna say, James, you know what? You do the same thing. If you have a 403(b) or whatever type of retirement plan you have, let's max out your contribution. James comes on to Jennifer's health plan, so now suddenly she can get an $8,300 contribution to her HSA. Don't ask any questions about why they have the same last name. That just is happenstance. And so let's give them a sense of what their tax situation is going to look like, now that they've been married. And what we'll see here, they're able to enjoy the married filing joint bracket. So, they get a little bit of advantage there by filing jointly. And even with his income, obviously he's deferring into his 401(k) pretty heavily, but even with both of their incomes, they're still just barely paying more tax than Jennifer was singly on the state and federal side. So again, this is just another example, going through the stages of life. How is my tax situation going to change? What can I expect? And in a matter of minutes, we're able to give them a good sense of what their situation can look like. But definitely get the prenup because that's a must. That's a must do.
So, what's interesting here is, again, a lot of people have different preconceived notions about things because they read it somewhere or a friend has an experience. And in the old days, you would sort of fly off the seat of your pants or do a back of the envelope calculation, or you'd pull out your handy chart, which I know we have at the end of the deck, right? Is like your handy chart, and you'd be like, oh, yes, like, let me look at this, which, by the way, I still look at this all the time. But the idea here that Holistiplan allows you to do it is when Jennifer's like, oh, I'm going to get married to this guy, my taxes are going to go down, right? And you're like, hey, I don't know, but we'll check and we'll let you know. We'll let you know if it makes sense to rush that marriage and do it this year, or maybe push it off to next year. Because if there's a significant tax savings, maybe they should do it this year. And so I know it sounds a little mercenary, but that's sort of part of our job a little bit, is to help clients maximize their wealth and help to protect them. And so to me, this is so much fun. Like when someone comes in, they're like, oh, I'm thinking about fill in the blank. In the old days, 20 years ago, you'd be like, well, yeah, like that should work out well for you. You're moving from a high tax state to a low tax state. But here's the thing, you don't know all of the rules and intricacies. So for example, New Jersey, which is known as a high tax state, but they passed all these tax laws over the last 5 years to try to keep lower income people in the state. So they're basically not taxing retirement income up to like $100,000, and then they phase it out to 150. So they're not taxing retirement income, and they're not taxing other aspects of income. And so all of a sudden, somebody in a lower tax bracket that you'd be like, oh, intuitively, yeah, that person should definitely go to Florida. Maybe it's not a huge difference. They also have property tax rebates here in New Jersey. And so I'm not trying to plug New Jersey, but here's the thing. When you have the software then can calculate all of this and you get a real answer. And so we had a teacher years ago, and she thought relocating to Florida would help her save a lot in taxes. And when I ran the numbers, it only saved her $2,000 or $3,000. Well, for $2,000 or $3,000, I told her not to do unnatural acts. But then we had a client who was vesting with all these stock options, and it would have saved her close to $200,000 to declare Florida as her domicile. And so I said, get your butt out of New Jersey. You don't have to go to Florida, but just get your butt out of New Jersey so we can save you $200,000. And so when you run the numbers, then you know whether it's worth it to do unnatural acts or not, right? Depending on all of this. So good. All right. So that was great, Greg.
Right.
Yeah.
And we're continuing on with the scenarios, and just this isn't necessarily a good example for this particular client, but just to show you what this looks like. Maybe this person's thinking of moving to a different state. It's so easy to just quickly create another scenario. We can go into our state tax modeling here and change the state. We can select from any of these states. So now, like Debbie said, what used to be sort of guesswork can now be put into action very quickly. So I'm just going to delete this scenario. And we want to just continue on. So, 7 years on, Jennifer and James have been married for about 7 years. They have a child now. Congratulations to them. And Holistiplan allows you to do some future, some future tax analysis as well. Just to point out a couple of things that the software is doing here. The standard and itemized deductions. This is all being carried forward, with inflationary assumptions. So great way to, to sort of project out into the future, and get a sense of what your tax situation might look like. Just a couple of other things I want to point out. I've selected no sunset in 2026. So this is a calculation field that allows for you to, maybe prior to the election, we would have said, let's just use current law. And what that would have done is maybe, in our settings, we opted to have TCJA expire at the end of 2025. So, with that in mind, we sort of have a sense that probably, there will be no sunset. So let's use that option here. Now we're still married filing jointly, but we have a dependent, so we add that into the mix. By this point, Jennifer's earning a little bit more. James is still working, working part-time. He's sort of the stay-at-home husband. He's taking care of the housework. So they're still both working, but and incomes have increased. But like Debbie says, clients come in all the time. Oh, I heard something from a friend. I read this online, and they say, you know what? We heard about this thing. It's called strategic divorce. Maybe that's gonna let us save some taxes. We heard it could be, a really great strategy. So okay, let's entertain that. Let's see what the numbers actually look like. So what we did here was created two scenarios in 2031 to see exactly that. So I'm just gonna start banking some of my old and scenarios here just so that everyone can see everything clearly. But let's break out all the income. Let's see what they can do. So now Jennifer's filing as head of household. The the child is listed as her dependent, and then James is filing as a single filer. And we've broken all of their income out accordingly. And really, the end goal here is just to say, hey, does this actually make sense? Would this, what you heard online, and maybe it could for various reasons. Maybe, there's a health condition, and for that reason it would make sense. But just from a dollars and cents standpoint, what are the ramifications here? What is the end result in terms of taxes? So we can see here, married with child. This is the filing joint scenario. They're paying about $56,000 in taxes. But if they go through with this strategic divorce, which I'm sure is going to cost an arm and a leg, and will certainly cost an arm and a leg in effort, what are you really saving? You're saving a few $100 on the federal side, and between the two, you're saving a little bit more on the state side. So okay, that's great. Maybe about three or $4,000 on the state side, but again, just the ability to create these types of scenarios, bizarre as they may be, quickly and get down to the numbers, is just, it's something that you wouldn't have been able to do years ago, but Holistiplan just gives you that flexibility.
I love that, Greg. All right, let's hop into the deck. I love that. Modeling out married with child, strategic divorce, strategic marriage. Yeah, that's great. And that's the idea here, is that it's allowing us to be strategic, thoughtful, data dependent, right? All right. So as we're finishing strong here, we got about 10 minutes left. Let's hop in last minute tax planning ideas. So this is very high level. We have covered this in a lot of detail in the master classes, and I think in one of these previous classes, but this is just a little reminder for folks that just haven't gotten around to this yet, or they think, oh, I've got plenty of time. I'm a little bit of a nervous Nelly, so I deal with these things on the early side, but just some reminders. Roth conversions, right? 'Tis the season. We're on a calendar year. Loss harvesting, okay, yes, the market's up, but there could be clunkers in these portfolios, or you can look at various tax lots that could have losses. Or maybe you had a poor manager, you had small cap value. I know like small cap's done better over the last month or so, which by the way, is one of the reasons you do not want to wait to the end to do tax loss trading, right? You want to do it throughout the year because you're going to have different opportunities throughout the year. But let's take a look at this, make sure you're not missing any low-hanging fruit. Capital gain harvesting. So again, those clients in those low tax brackets. Well, how do I know that, Debbie? Well, you have Holistiplan. We then have that dashboard. You can identify those clients that are in the 0% capital gains bracket and do some capital gains harvesting for them. Maybe they have this large Apple position, and every year you want to chip away at it, right? So this is a great, great way to be thinking about it. We want to max out on the retirement plan contributions. We want to review benefit plans. So a lot of your clients now, it's enrollment period for their benefits plans with their employers. You want to reach out. You want to make yourself available for those clients. And then, of course, Medicare open enrollment, which is going to be ending in the next month or so. You want to make sure that your outreach to clients in connection with that. And then charitable giving. And so there's QCDs, which ideally should be taken before the RMD. We talk a lot about that also in the masterclass. Consider bunching deductions. So if you've got clients that are charitably inclined, maybe they load up on the charitable contributions this year, and then next year take the standard deduction. And then just generally speaking, getting those charitable contributions in before the end of the year, ideally with appreciated stock, ideally, not writing checks, right? There's usually ways to do it that's better and more creative. Roth conversion analysis and Holistiplan. So we've got 9 minutes here. If you could do something quickly for us, Greg, because we do have a few questions that have also come in.
No, I know, and I'll be as brief as I can. And one thing I just want to highlight on this slide, while this is a planning tool that we use throughout the year, and ideally you're doing these analyses earlier in the year to take advantage of maybe market downturns or opportune times to actually carry out the Roth conversion. One nice thing about doing it at the end of the year is that you have all of the information. You know what the portfolio has produced in terms of income. So maybe what was an $85,000 Roth conversion recommendation, the client decided, or some outside advisor realized $50,000 of short-term gains on a runaway success. So now let's pare that back a little bit. Let's adjust that recommendation. What I'll do quick is just jump back into the software, and we can look at what maybe that would look like. So in this instance, let's say that Karen and Eli Champagne, hopefully everyone can see my screen. Let's go into their scenario analysis. We did do a Roth conversion for them earlier in the year. And I'm just going to copy here a scenario so that we can create a Roth conversion scenario. And at this point, we were thinking about an $85,000 Roth conversion. But like I said, we thought they were going to be in losses for gains. So suddenly now we have a $50,000 short-term gain. And again, I hope that the ease at which this is all done just furthers the point that the software just allows you to run these iterations so quickly. I'm going to use a tool here that's called solving for minimum and maximum, and what that does is gives me a sense of where this taxpayer is in terms of their tax brackets. So right here, I see that they've actually jumped into the next tax bracket. So I can sort of guess that based on the scenario. I'm familiar with it, but in this instance, I see net change in effective rate to get below, to the next lowest tax bracket. So I can see that I'm about $30,000 over the tax bracket. So like I said, what was maybe an $85,000 recommendation should now be more like a $45,000 recommendation. And so in doing so, it keeps them within the tax bracket that we were initially targeting. So like Debbie said, we're marching towards the end here. So with that, I will jump back over to our presentation. And again, we have a lot of these slides here, a lot of these screen captures so that you can see, what we're doing in the presentation itself. And of course, the end result, what we actually send to the clients, this report here that outlines our recommendation, the comparison for communicating to clients.
Yeah, so this is really important. It allows us to show even the IRMA surcharges. That comes up a lot, right? People are like, oh, is that demonstrated to the client? Yes, it is. Holistiplan shows us that. Additional state taxes, all of that is captured because, the clients don't want surprises. And so this is shared with the client. And then the next slide shows the Holistiplan, the scenario analysis. the email analysis that we actually send to the client, summarizing, what our thoughts are and what our recommendations are. And so heading into the last couple of minutes here, we know that tax laws are changing. We're not as worried about certain things now that, all three branches of government are dominated by Republicans, but we still have a TCJA sunset in a little bit over a year, as we talked about. And so we want to be super alert. So the next slide shows you something that is a very handy tool that I use. And this is from Horse's Mouth, and I do work with Horse's Mouth, but it's a great summary. It's a front and back, and it helps to sort of pull together all the data, because every year they're doing inflation adjustments, there's tax law changes, different part of the Secure Act become effective. And so this is very helpful to me. I don't go into any meetings without my key financial data sheets, my little cheat sheet, because I cannot keep track of all these inflation adjustments. And so bonus material is the announcement that we send out to the client requesting that we review their employee benefits manuals. And so that is the bonus material. And then the last slide here is the QR code to get the discount. And I know that there were some questions in the chat about how much it costs to get Holistiplan. It is absolutely worth every penny. And so with that, we've got 4 minutes. Let me answer these two questions. So one of the questions is, do most advisors using Holistiplan charge fees for tax planning? And that's a great question, Scott. So, there's so many ways now to approach charging. And this is one of the topics that we have covered in the master class, right? Is years ago it was much simpler. You'd have an AUM fee, and the few services you have get baked into that. Now with all these additional services, right? It's like, okay, how do I charge for this? At Taylor Financial Group, our minimum is $2 to $2.5 million, and at that minimum, then we do not charge extra for tax planning, which is one of the reasons that our minimum is at $2 to $2.5 million. Is because there's enough revenue coming in, we can justify all these additional services without nickel and diming the clients. Now, at lower AUM, let's say $1 million to $2 million, maybe 750 to $1 million, right? You might consider having a hybrid arrangement where you charge that AUM fee, but then you also charge some type of monthly fee or annual fee on top of the AUM fee to make up for the fact that you're doing all this additional work. And so we do see more and more folks using those hybrid fees, particularly if the assets don't meet a minimum amount, but that client still needs a fair amount of help. Think somebody who's getting divorced, who's going to come into a lot of money down the road, but right now still needs a lot of planning. Think maybe even a business owner who's not had a liquidity event yet, right? Or just a regular person, right? They all need planning, but their assets might not provide enough profit to you to give them the planning. And that's when a monthly fee that can be run through their credit card even. Folks are so accustomed to that Netflix approach, that monthly subscription fee. They don't even blink an eye, actually. So that is another way to be thinking about it. But we do not, once the client is at 2 million, and most of our clients are at 2 million and above. What do you find the best way you found to get the return from clients? You have them email it in, mail it, pick it up. All of the above, Michelle. And so we start harassing clients in early May. I think we request the tax return no less than like 10 or 15 times throughout the year. We bake it into our weekly newsletter. We have emails that go out for them. We call them. And so we ask for it so many times, and we basically send them quasi-threatening letters telling them that we cannot do tax planning without the tax return. Having said that, we tell them they can get their tax return to us any way they'd like. They could drop it off. We have a vault. We can set up a vault for them. We'll send them a link. If they feel comfortable emailing it, yes, they can email it. We just want to get our hands on the tax return. So hopefully that helps you a little bit, Michelle. And we have a specific outreach that we send to them saying, hey, you can get it to us any of these ways. And here are some of the ways you can get it to us. So with that, it's 4:59. Please sign up for Holistiplan. You will not regret it. And with that, fortune favors the bold. And back to you then, Laura.
Thank you, Debbie. Thank you, Greg. That was super informational. I really loved how you showed how to make tax planning scalable by using some of the tags in the dashboard. That's something that a lot of people don't know. So love that part. And yeah, as always, this is being recorded and we'll send out the recording and the slides probably within the next 2 days or so. So keep an eye out in your email for that. And with that, we'll see you soon. So thank you, Debbie. Thank you, Greg. And thank you, everybody who attended. Have a great day.
Thank you.